if you're on a real account and you can swing trade, look at that. If you watch to the end of this video, I just gave you so much fucking free secret sauce to FOMC days. Free fucking sauce, and I bet you it'll go unnoticed. Most people would say don't trade on FOMC day, but I'm gonna show you guys how to catch your daily buys. This video right here. Starting on the 1 hour, we're gonna plot this. So this was our, whoops, wrong swing high. As you guys can remember, I was showing you this yesterday, but I updated my settings a little bit just for the visuals. So as you can see, we had our imbalance over here. And before this sweep of liquidity and the bias flipped, you can see that we have a high volume node right up here. If we go to the 4 hour, that's gonna match up perfectly right here. This one. So right here. MES. MES swept that liquidity right over here. Had that deeper retracement inside of that. So now that we have our POI on the higher time frame, and we know what we rejected from, you got the follow-up 1 hour change in state of delivery. Draw from swing high to swing low. So we don't have a fair value gap over here. We don't have a fair value gap for rejection. And we didn't take the London high, so we have resting liquidity as well as resting liquidity because we didn't take London highs. MES didn't either. MES left those intact. So that was just expansion. We got resting liquidity right up there. So since that was just expansion, we just bring bring that down. You can see now that we don't have a sell side imbalance. It's just a buy side imbalance after we just swept the New York PM swing low from yesterday. You could tell as well if you saw from this. During the Asia session, we left the imbalance intact, while this lower imbalance actually, this one lower, we left that lower one intact with buyers down there, while we held this one. At the equilibrium, pushed up, left liquidity resting down over here. What happens right after you sweep that swing low? Push up on the 1 minute. Got the whoops. Got the inverse fair value gap. Break right above it here. One more time with the volume profile for confirmation. This one's real fucking small. There you go. You got your imbalances right there. right under this fair value gap, very tiny fair value gap. But you could have also taken it to the retrace of, you could have taken your entry off the retrace to the inverse fair value gap. Both would have been good plays. Here's the regular fair value gap. It's not really a fair value gap, never mind. The inverse fair value gap was better, but you could tell that there was an imbalance right here. And then, what do you target? The swing lows that, the swing highs that were failed to get taken at the end of the end over here. And that would have been a clean 190. A little bit over 100 points, a little bit over 100 points. Would have been solid. You would have hit TP1. Risky for FOMC, but higher time frame bias also switched to bullish right here. After we swept that low, watch this. You get rid of this shit, fucking clean that shit up for you guys. Clean this shit up a little bit. Alright, boom, we swept that, right? Change the state of delivery. Market structure shift on the 1 hour. One more time. You see we got imbalances all the way over here, so you got one up here, but obviously you're not going to enter all the way over here. You want to wait for a retracement. Over here, you can see we retrace into the low volume nodes that were there. This is the right one. Over here. What do you get right here? Change the state of delivery. It's got the mini microstructure shift right here. So you got two fair value gaps aligning right here. Two of those right here. Got a inverse. The first inverse candle right there, boom. All three of those stacked on top of each other. First breakout here. If you want to play it safe, would have been a little bit more risky, as opposed to just buying in right here, having a little bit less drawdown. Chop, chop, chop. Eventually, if you had your stop at the swing lows, where do you get taken to? The last liquidity level, which is now New York kill zone swing high. Get rid of all these shits. Fuck. Get rid of that, right? What do we have here? Change state of delivery, market structure shift, but we took those New York kill zone swing highs, right? Where's my lock? So now you can see over here we don't have any bullish imbalances. Got a bearish imbalance. Bearish imbalance. but none of those would be within the what's it called, the OTE range for rejection. If we draw our fib, none of those would line up. I'm not gonna draw it just for the sake of time. One more time after the sweep. My audio recording fucked up today, guys. That's why I gotta do it this way today. Boom, right here. Sweep liquidity. Our first mini microstructure shift. It's the last swing high, right? Fair value gap. Inverse fair value gap. Overlapping. Just double check. All bullish imbalances. All bullish imbalances over here. Right here, this was our most probable one, obviously, because this is our market structure shift. Inverse fair value gap. Down here, it's absolutely nothing. Right? So we're not looking to go down there. We're looking to hold above this specific candle. What do we get? This was at the end, literally, but if you're on a real account and you can swing trade, look at that. If you watch to the end of this video, I just gave you so much fucking free secret sauce to FOMC days. Free fucking sauce, and I bet you it'll go unnoticed.